You've heard of Merck, the pharmaceutical giant? They just settled a $1.4 billion lawsuit with their cyber insurance carriers over losses they suffered 6 years before. And why am I telling you this? Because it changed the cyber insurance industry in ways that directly impact small and medium-sized businesses. And because it makes it more likely that your own claim for cyber losses might be denied or reduced. We're going to let you in on how to make sure your claims are honored without drama and without delay. But first, welcome to CyberSips, a series of short videos on cybersecurity for business people. We don't bother with technical jargon here. Instead, we dispense sound, practical business advice. If it's the first time you're joining us, please consider subscribing. If you stick around to the end of the video, I'll tell you about this wine. It's fantastic. So let's start with some facts. Cyber risk is higher than it ever was. Ransomware attacks alone are 6 times larger than they were only 4 years ago. More organizations applied for cyber insurance in 23 than did in 22. That's the 10th year in a row the number of applications went up. Coverage is more expensive than ever. Some of the more comprehensive plans have gone up 79% year over year between 22 and 23. It's more complicated now than it used to be to navigate the entire application and underwriting process. It's more difficult to obtain. And 27% of cyber insurance claims are either outright denied or reduced. So let's concentrate on that last one and talk about the reasons why your cyber claims might be rejected. The first reason is the most obvious one. The claim you're making may already be excluded. Cyber insurance policies have inclusions and exclusions that protect the cyber insurance company, not you. So read the fine print, understand what's in and what's out. No excuses. The second reason they might tell you no is inadequate documentation. Your insurance company will require you to submit specific and detailed information within the time limits set strictly within the policy. They'll want to know when it happened and how quickly the impact was felt and what steps you took to mitigate the loss, along with specific information about how big your loss was. Okay, you need an incident response plan, and you need it ahead of time. A crisis is no time to practice your improv skills. Reason number 3 your cyber insurance company might tell you no is lousy cyber hygiene. If you haven't put together reasonable cyber defenses, or if you're casual or haphazard in your enforcement of best practice policies, you could take a financial hit. Things like having your firewalls fall out of support, or sporadic enforcement of two-factor authentication, or inconsistently applied privacy policies are the kinds of things they look for when they don't want to write a big check. There's a fourth reason they might tell you no, and that's if you fudge your application. You're going to be tempted to exaggerate your level of cybersecurity readiness. Don't do it, because when you send in a claim, the insurance company is going to investigate that claim. If they find any evidence of pre-existing vulnerabilities that you didn't reveal in the application, they're going to say fudge you when you want them to say, here's your check. And there's a fifth reason an insurance company might deny your claim. I hate to even mention it. That's as if you overstate or exaggerate the size of your claim. It should go without saying that you don't want to inflate the amount of your loss from any cyber incident. In fact, it will go without saying. Our viewers are good people, and good people don't commit insurance fraud. So here are the takeaways. 1, know your policy. Know its ins and its outs. Know its exclusions. No excuses. 2, put together an incident response plan now. Don't wait until you're in the middle of the crisis to break out your improv skills. They're probably not all that good. 3, document everything. Document what you've done, what you're doing, the size of your losses, the timelines. Make sure everything is documented. 4, practice good cyber hygiene. Have the discipline to enforce cyber best practices across your organization. And 5, resist the temptation to exaggerate your level of cyber readiness on your insurance application. That can only hurt you later on. I'm Mike Gavigan, and this has been Cyber Sips. And we would love it if you subscribed, gave us a thumbs up, hired a skywriter to talk about it. I promised you a little bit about this wine. This is a Zinfandel by Seghesio. They're a small winery in northern Sonoma, in Healdsburg. It's one of the best places to visit here in Sonoma County. You can call ahead and play bocce on their bocce court, sip their wines. It's a fantastic place to go. Their Zins, that's all they make, are Zinfandels, and they are a little more fruit forward than a lot of Zins, but they still have that great note of black pepper that we all love in a Zinfandel. It's fantastic. I'm going to finish this right now. Until the next time.